Ben here just asking us in the last episode in the comments, hey guys, any thoughts on investing in Bitcoin instead of buying a home? I feel like there is more to life than a property, but TradFi tells me I'm wrong. Lol, curious what you all think. Thanks. Any thoughts of Rashad, Joe, Forrest?
TradFi's been wrong about Bitcoin this whole time until, like, I mean, why did it take until 2024 for there to be a Bitcoin ETF even, right? It took until 2020 for the first company to meaningfully buy Bitcoin and put it on their balance sheet. There was a lot of education, a lot of time, a lot of ability to buy Bitcoin before that. And the entire time you've got to go against what TradFi was saying. And it's really only now that they're beginning to wake up to it. And it's still yet just a, 5%, 5% of your portfolio kind of concept from people like Morgan Stanley. Even there was Charles Schwab released like this educational video about
all that,
about how to hold Bitcoin. And they talked about, they conflated risk and volatility, which, short-term volatility is a risk, but it isn't inherently risk, if that makes sense. It's not a risk that can't be mitigated. So, these are like, it's all just about education, and it's about, I think with a lot of it, it's also, TradFi is seemingly kind of late to this, right? Like Bitcoin is money. Money is a financial concept. These people are financial educators and actors. And so they should understand it, and they don't. And they're pretty far from the understanding that us everyday plebs have. And that's why people come and listen to us about Bitcoin, because we're far more educated about it than they are. So they got a lot of catching up to do. And you can look at so many other aspects of the financial TradFi industry and realize how wrong they are too. Like, why should you be using a financial advisor when they underperform a simple index fund? Why should you be buying locked in illiquid mutual funds to get 1 extra percent, maybe, if you're lucky? Or you're, investing large monies in hedge funds, which they know they're going to underperform the S&P, but it's a hedge, right? They're diversified in a different way than the S&P, and that's what you're paying for. And you're actually losing money from that. So there's a lot of nonsense that goes out there with TradFi. And so I'd be wary of it all. And that includes the concept of ownership of property, which you can even debate if it's even real ownership. And I think it's different. And I think there's a little nuance there where it's different if you're talking about buying your own home to live in. And there's a difference between buying property and real estate as an investment. So we'll get into all of that, but those are my just initial thoughts on that.
That's a good way to start, I would say. I echo the majority of things that Forrest said there, and I think that Wall Street is finally catching up. I mean, it's the one thing I learned pretty early on in Bitcoin is the concept of following the incentives. And Forrest alluded to the mutual funds and the products offered and the return and how the whole system itself works. It's completely backwards to me, because again, people go to these advisors for advice. We're talking about TradFi here, about how to set them up better financially. And, the majority of financial advisors that I've known in my life and have known for the last, decade or so, they spend more time on the phone with their clients than they do looking into what's next. It's just kind of, it goes into the machine. There's certain unique products that some firms have and some don't, but there's, on the other end of that, there's usually a kickback to the advisors. And the more they purchase of that certain product, the more that comes back their way. So in Bitcoin, it's a little bit different. It's almost roles reversed, where we spend the majority of our time trying to figure out what the best option is here, as we're having this conversation today. And we don't ask for any fee. We're on YouTube for free. Anybody can watch this right now. So it's just a different system, I think. I think that it really depends on, the purpose for the house, the area, how long you plan on being there, because there's a lot to it. There's a lot that goes into it versus just owning and renting. But the one thing that I keep thinking about every time I see somebody selling their house for Bitcoin is I keep hearing Klaus Schwab say, "You'll own nothing and be happy." And again, kind of about at the same point, I catch myself, because what Forrest said there is absolutely right, in the sense that you don't really own it. You don't own it because everybody knows this who would be watching the show, but you stop paying your property taxes and you find out pretty quick who owns the property. But there is still something there in terms of like being rugged, being susceptible to risk. Because if you have a landlord, you could get rugged. It's almost like a third-party risk there, that at any time they could decide that they want to fix their house. They could do some renovations on it, and you're looking for a new place to live. So there's a bunch of trade-offs there. I'm actually really excited for the conversation today about this, because I think it's on a lot of people's minds right now.
Yeah, I don't think it really makes sense to buy real estate as a savings vehicle, and that's exactly what a lot of people do. They don't think of real estate as, I mean, they say that, oh, it's because it has utility, that's why houses are valuable, but they're not buying houses for that utility. They're buying it as a savings account. And a lot of people, I mean, really, when you think about it, the financial services industry makes money from you not quite understanding how it works. So if they're telling you to buy houses, it's because they make money from you. And once you grasp that, I mean, everything is about profit. Everything is about that motive where they want to bring in customers. They need customers. The bank needs customers who are willing to buy more houses and who are willing to borrow money to buy more houses. Because if they don't find customers, then the entire system just falls apart. That's what needs to happen. They incentivize you to buy houses by giving you low interest rates, even though you're actually getting screwed over, and they're just taking a cut out of out of the money that you make. They're taking a cut from really not doing anything. I mean, they print the money out of nothing. They convince you that you need to get a mortgage. People buy houses. They increase the demand for housing, and the banking system just makes money from doing that. So why wouldn't they keep doing that? Once you understand the incentives and you start questioning them, everything just changes. Everything pretty much just falls apart.
Yeah, it's really interesting. And I think we all, and probably most of the chat, agrees on it's not a good idea if you already own a home to invest in another one and just like buy Bitcoin with that instead. So I think for the sake of this video, because we also want to keep it short today with like about an hour, let's focus on like the specific thing, like buying a home versus renting a home. So like the one option would be you rent a home, and instead of having a, I don't know, 100K down payment, 50K down payment, 200K down payment, whatever your house will cost in the end, putting that into Bitcoin and saving, maybe even like having a cheaper rent than the mortgage. I made some calculations with two similar homes versus renting, and in all my cases the mortgage was higher than the rent, and I had to do a down payment. I don't know, I just did like one example, so I don't know if this is always the case, or the mortgage can also be cheaper than the rent. What I keep coming back at it is, if you get really attractive rates for a home and you have only a little down payment to make, so you are extremely financially well off and the bank is lending you a lot of money, and you don't have to put in a lot, it can make financial sense. The question is, do you want to have it emotionally? I mean, that's also another thing we kind of have to talk about. Some people just want to own a home emotionally, like, and if you're that person, there's no debate. Like if you feel better in your own four walls when you own the place versus renting it, I think there's a, if you can do it, you probably should, because you just feel better and that makes you more productive. This will allow you to do things. I don't know how you guys think about that, but yeah, like there's a lot of different thoughts on renting and buying Bitcoin with a down payment versus buying the home and just like buying a little bit DCA in Bitcoin next to the home. What are you guys thinking?
I mean, if that's the question we're going with, is like, if you had the choice, if you had a bunch of money that you're sitting on right now, or not a bunch of money, but enough money to purchase a house via down payment or put that into Bitcoin right now, I think without a doubt, regardless of what's going on, unless it's like your dream property that's only going to be around for, scarcity, I guess, and desirability are factors in this. But for the most part, I don't think that's a thing for people. So I think that my decision with that would be put it into Bitcoin, hold off on it. I just see such a huge variance and discrepancy between Bitcoin being incredibly undervalued and housing being incredibly overvalued right now. And so I think the one thing that Bitcoiners do very well is they delay gratification. So the other nice thing about renting is that you're very flexible. And, at a time like this in the world, lots of uncertainty, lots of chaos, I think the more flexible, the more agile you are, the better off. And that to me is renting. And so that would be my decision. I wouldn't be buying a house right now. I wouldn't be sinking that into a down payment. I would be buying Bitcoin and just kind of waiting to see what happens over these next couple of years.
I think there are benefits to buying houses. For example, like my house, we bought it in 2019 or 2018. And today our mortgage is like 2,000 Canadian per month, or like 1,400 US for a townhouse. I think that's pretty good. So there are benefits where basically you're locking in your price. And I
Yeah.
think the asset isn't the actual house. The asset is the mortgage, the
Mhm.
ability to borrow money and bring your future consumption to the present. And you just have to find a lender who's willing to do that for you. And banks are willing to do that. So why not take advantage rather than buying the house in cash, use the mortgage? So if you're, let's say, for example, if you do have the means to get a mortgage, I think it's worth it. Let's say, for example, if your down payment is really small, like let's say they say, oh, you can get a 40-year mortgage and you only have to put 5% down or 3% down. In that case, it's definitely worth it. Even though you're paying, like, let's say, property taxes, you're paying for all those things. If you consider that, I mean, it makes sense because you have stability, right? And I think that's something that a lot of people are missing. I think entrepreneurs need stability because their income isn't stable, and having that stability in my mortgage made a huge difference for me, and it really helped me to take more risks in my life. So if you look at it from that perspective, that could make a difference as well. There are always trade-offs. There's no perfect solution. I think that's the key. For every single person, there's a different situation, different solution. You have to look at all of those solutions before you actually come to your answer.
I think we should double tap a little on why the loan, the mortgage itself, is the asset, and it's partially because you're taking on debt, and you probably get pretty good rates on that debt because the entire property ecosystem, the banks and everything, they all want this system to perpetuate itself, so they're willing to give out loans at really good rates,
Yeah.
and you take on the initial capital ahead of time to buy an asset, and this asset is a home, and it's going to perform at some kind of average rate as an asset that increases in value. And then the debt actually gets cheaper over time because you're paying, say, 5% on an interest rate, and the money gets debased at 7 to 10%. So it gets easier and easier to acquire more dollars into the future as the money becomes more available. And that's where the arbitrage is, and it's essentially like a huge leveraged play when you buy a home. If you put 5% down, 10% down, you're that's massive leverage that you're taking on by taking on that debt. And that's why, even if housing only performs at like 5% annual or whatever, you're so leveraged to it that if you calculate it off your initial down payment and your monthly installments, you're up massively on your investment. And I think the difference, if you were to rent, is you kind of have to think, okay, well, if everything is equal with like rent and mortgage payments, and you're kind of mortgage payments will do this like forced equity thing where part of your payments every month, not maintenance, or maybe some of maintenance might, but like property taxes, insurance, these are not going towards your mortgage, right? Your mortgage payment goes towards your mortgage. So it's like this forced investment that I think happens. And I think that's why a lot of people end up having a lot of wealth in their older years, because they've been forced to invest, which is probably something they didn't do anywhere else. But if you take all of that investment that you make and the down payment, and you were to buy Bitcoin instead, you're buying something completely unlevered in that situation. And that still has potential to completely outperform even the leveraged asset of real estate. And that's kind of the bet you need to make between renting and getting a mortgage. If all things else are equal, like ability to get a mortgage or ability to rent a place, which some people qualify for one or the other in different places. So that can be a challenge too. But like, I think that's what people are not understanding, is just how freaking leveraged you are when you have a mortgage and buy a home.
I think the down payment is an overlooked aspect of the whole calculation, because if you have a down payment of, let's say, 20%, I made the calculations with a 4%, I think, interest rate once for my sister. I think we discussed it even on this live stream beforehand. If you make that, you just need to buy with that down payment an asset that goes up 7% or more in the year, and you're actually outperforming your own real estate property. But if you have a down payment of 3%, 4%, 5%, or like 2%, you are so leveraged that even if that real estate property just keeps up with like 3% appreciation per year, you're making so much more gain in purchasing power every single year that it's really hard to invest in something that keeps up with that. Because you like almost paid nothing down, and on the other side you also have to pay rent, and you also have to pay maybe your own furniture stuff and all of those things. So even if you're renting, most of the people buy their own furniture, and so I guess it's not as satisfying as an answer as some might want to hear it, but it really depends on your down payment and your interest rate and your personal situation, because you can't just say, yeah, the one thing is better than the other thing, without knowing, okay, what are the variables, what are the inputs, what are the down payments and interest rates.
I mean, from my perspective, I 100% agree, Rob. And I just think that based on where we are right now, this second in the markets and everything going on, my answer would be clear cut rent instead of buy a house right now. I just think that there's a lot to factor into it. A lot of these calculations, what you guys are saying is 100% accurate. It's just that I just feel like the housing market, especially here in Canada, and again, I guess it could be different parts of the world, but it's just so inflated. It doesn't make any sort of sense. It's all still based on real estate being a store of value. And what we're seeing more and more each day with Bitcoin, with products like Stretch, is that real estate really isn't a store of value anymore. And so as soon as that capital starts flowing from the real estate as a store of value into other things like Bitcoin, like Stretch, like whatever, the market's going to come down. I believe that anyways. I know it hasn't historically happened. And, you know, if you just look at some of the statistics here in Canada and the US, like the housing market is just ice cold right now. Like there's realtors who didn't make a sale in 2025. And you compare that to the last couple of years. So that to me is a trend that real estate prices should be coming down, simply because there aren't enough buyers for the amount of people selling. And, you know, it's going to get worse. The people who are 70, 80, 90 years old right now, there's going to be a lot of those houses coming on the market in the near future. And, you know, to me, it's a no brainer. Just put it into Bitcoin, especially considering, you know, where we are, we're 40% down from the all-time high. There's a lot of traction. There's a lot of momentum building in Bitcoin. And I just think that you'd be crazy to put that into real estate right now.